Somebody once said that there are two certainties in life. Death, well, let's not deal with that. Taxes, that's what this channel is all about educating about tax and finance. But it's not very interesting, is it? And do I have to know? Yes, because if you don't know, you're going to miss that deadline, you're going to miss that planning opportunity, you're going to potentially get fined. And none of us want to do that. So let's get into the detail. So tax in some ways is a bit like that game of Monopoly, where when you go back to the start, you don't pass the start, you go direct to Dale if you don't pay the tax. If you don't pay the tax, that's tax evasion. And bad things then happen if we don't pay tax, like the economy fails, Social Security doesn't happen, health service stops. All of those things that we take for granted all stop if we don't pay tax. So we need to know when to pay tax and what the dates are. Okay, so when do we pay tax? Now let's split this into the three main taxes and we'll ignore employment for a minute. If you're employment, you'll pay tax on a monthly basis, weekly basis, 2 weekly basis. Whenever you get paid, you'll pay tax. And then your employer pays that over. You don't need to worry about it after that point. Your bit of the process is done, complete, finished. Move on. If we dealt with PAYE, the next tax to think about is corporation tax, because in some ways, it's the next simplest thing to deal with. Why is it the simplest thing to deal with? Well, if you're a owner-managed business, then you will pay tax 9 months and 1 day after your accounting year, and you pay 100% of the corporation tax on that date. You don't have to make payments on account. You don't have to worry about anything else. That's why it's straightforward. You just have to remember, my year end is the 31st of March, for instance, and I just have to pay the tax by the following 1st of January. Move on and forget about it. Capital gains tax. Well, here's a good one, because this gets marginally complicated. The reason it gets marginally complicated is it depends what you've sold. If you sold a property and it's a second home, let's describe it as, then you have to pay capital gains tax within 60 days of the date that you have sold the property. And that's completion, not exchange, okay? So you have to pay it within 60 days. Now here comes the wrinkle in the process. That 60-day payment is classed as a payment on account for capital gains tax. And the final number is calculated when you have prepared your self-assessment tax return. And that's one of the events that will trigger a self-assessment tax return. Just remember, if you're selling a residential property, it's 60 days, and that's what you need to do. If it's anything else, it's when you pay tax normally in relation to self-assessment, and that's what we're going to come on to. Self-assessment tax. Okay, you pay self-assessment tax on one of 3 occasions, but it happens that the date is the same for 2 of them. I know, it gets complicated. This is what we need to deal with. On the 31st of January, following the end of the tax year, so that's right, it's 10 months after the end of the tax year, you have to pay what's called a balancing payment in relation to your tax. And that balancing payment is calculated as being whatever the tax was on your income, less whatever you have paid on account or has been deducted from a salary or something like that. And it gives you a number. And that number is the balancing payment. And that's what you pay on the 31st of January. But Martin, I've heard of these things called payments on account. What are they all about? Well, that's the other thing that you pay on the 31st of January, but only in certain circumstances. So if the tax that you owe is more than £1,000, then on the following 31st, on the 31st of January, you also pay 50% in advance for your tax for the next year. That's right, another 50%. So if you've just started self-employment, you've just gone into it, you started the last tax year, and you're going, right, this is my first tax return, and somebody gives you a big bill, which they might do, and you go, well, hold on a minute. What? No, my tax bill was this. Yep. And then you've then got to pay that payment on account. And I describe that as you're buying yourself into the system. And why are you buying yourself into the system? Because you've paid no tax for the whole year. You've had, in essence, I don't know, what do you want to call it? A tax-free period to build up the money to buy yourself into the system. And you need to be aware that buying yourself into the system can be really, really painful because it's effectively 150% of the tax, but it's a one-off. Once you've done it, you've done it. Now, obviously, if your profits stay the same, then, okay, that's just going to be 50%, 50%, 50%. If your profits go up, then that balancing payment comes back in. If your profits go down, you get some money back. So we touched on payments on account, and they are paid the 31st of January. They are also paid 31st of July. So you pay half in January, half in July. You get to the following January and you do the calculation. So this payment on account is based on your profit, your income for the previous tax year, not the one that we are in. If you want to manage your payments on account, then you've got to get your information in early to your accountant, to the tax authorities, so it can all be calculated for you. That's the point of getting things done early rather than waiting for the following December, because everything's all a bit hard. The sooner you give the information to somebody to work it out, the sooner you can plan, the less uncertainty you have, the more you're able to deal with things at the right time. So paying tax is painful. Yes, it is. But it's the way that we fund the bits that we probably take for granted, like the health service, like social security, like the benefits that we are all fortunate to receive if the worst has happened. But without paying that tax, we can't have those. And then our economy, all of the things that we take for granted become a challenge. So if you're not sure whether you need to pay that tax, why not check out our video on self-assessment?